I'm Vern Hoven, a CPA with a master's in tax, and I'm hosting today a discussion on post-election tax roundtable. And I am joined, just absolutely joyfully joined, by two real special guests. And first one is going to end up being Karen Brosi.
Well, I'm Karen Brosi, and my practice is in Palo Alto, California, right in the heart of the Silicon Valley.
And I'm Sharon Kreider, and I also am in California, in the heart of Silicon Valley. I have a practice in Sunnyvale, California, but I also am in Bozeman, Montana a lot. So I'm turning into a bi-coastal.
Not exactly coastal, I don't think.
By weather, by snow, by something. We're in Bozeman, Montana, filming in a studio today to talk about the world's longest, most tedious election following the longest, most tedious tax season.
So let's get started with just a general question to the two of you, and I think that I'm going to start with you, Sharon, on it, is what would President-elect Biden want to see as changes in your mind? What's up?
Well, he certainly has talked on the campaign trail about raising taxes on the wealthy, lowering taxes, and giving more benefits and credits to those who are of moderate income. Now, some of that discussion that Karen and I have had before is the president-elect has a very, very detailed tax plan, tax proposals. But what the president asks for might not really happen.
Well, and that's correct. We should always remember, I think, that the president does not actually enact tax legislation. That's the job of Congress. And it appears that his same party is not going to have control of the Senate. And so that is going to slow down, I think, if at best, and maybe even hinder the ability for President-elect Biden's proposals to come into effect. However, one of the things that is encouraging, depending upon how you fall on those proposals, is that the president-elect has demonstrated in the past, his ability to reach across the aisle and to effect consensus and compromise. And so it may very well be that while his opposing party would not necessarily be in favor of his overall tax plan, I think parts of it are certainly enactable.
I do too. I think this is about horse trading and compromise, and we haven't had that in a long time. Mm-hmm. We have not had the ability to pull some bipartisan support across. I would tell you that right now, in anticipation of the election, before election, there was bipartisan from the House Ways and Means Committee on some more pension reforms. I don't think we want to talk about everything that might show up, but we do know that there could be compromises, and President-elect Biden could do something about making a few of these many pieces of paper and plans work.
Well, let's start then in the individual section. Let's talk about what type of individual changes might be supported by the White House. And let's start with individual tax rates.
Well, on individual tax rates, the president all along has said he wants to reinstate the top rate of 39.6, and that would be for those taxpayers earning above $400,000. Now, there's not a lot of detail on that. Is that $400,000 for the married filing joint and $200,000 for single or head of household? Details aren't out. These are concepts. 39.6 is the top rate. Those people are now paying 37%, and that's why I think it might be that the president-elect might be talking about the married filing joint at $400,000. So 39.6 is the first, but the other thing that Mr. Biden has proposed is capital gains rates changing. that the top rate would no longer be 20%, but would be 39.6. Now, it wouldn't happen
For
until
capital gain too?
for capital gains, for long-term capital gains. Now, that one doesn't happen until the income is above $1 million. So we'd have 0 rates and 15 and 20 and then we'd have ordinary income switch in there sometime. And part of the analysis I read said then that picks up the hedge fund and
The carried interest.
the carried interest that we'd heard a lot of comments in not only prior presidential but in midterm about fixing what happened with carried interest. So he has a plan that he and Vice President-elect Harris say will not affect anybody below $400,000 of taxable income.
I know that this is not the time to ask it. What's carried interest, Sharon?
Why do I get all of the difficult questions? Well,
And it is difficult.
the basic concept is this, that if I am a syndicator, often it's a hedge fund syndicator, developer, or real estate developers often do this. We put together a project that ultimately is going to result in the sale of assets at capital gain. But I'm the one putting this together, and it's going to be a time frame where I'm going to do all the work. So I want to receive extra amounts. I want to receive, call it management fees. But if I just call it management fees, that's ordinary income, isn't it? And taxed at ordinary income rates. So instead, I take my quote-unquote management fees in a separate profit percentage out of the fund or out of the partnership or the LLC that will kick in when the underlying asset is sold. And as a result, that extra profit percentage is coming to me upon a capital gain sale, and it converts what otherwise would be ordinary income to long-term capital gain treatment.
Sharon, tell me a little bit of potential changes on itemized deductions for individuals.
Well, and I know you like this one, Vern, because you always talk about the peas deduction or the peas provision. And
P-E-A-S-E.
That one.
I thought it was about vegetables. You know, the peas. So there are two proposals in Mr. Biden's plan. One is to limit the benefit on the itemized deductions to 28%. And by limiting it to 28%, that stops the wealthier person from getting as much benefit. And then he would reinstate the PEAS limitation, which was an AGI limitation on as your AGI climbed above 400,000, you would start to lose part of your itemized deductions. We've done that pre-TCJA. So those are the two changes that he would make. Limit the benefit of your itemized deductions to 28% tax bracket, right? So if the people at 37 and 39.6 aren't getting as much benefit, and to reinstate the PEAS AGI limitation on itemized beginning at $400,000.
Individual tax credits. Where's any changes that are being proposed by the incoming president?
And I think we're both going to do those, but I'm going to start with one. I'm going to let Sharon pick up some of the enhancements, but I'm going to start with everything old is new again, because there is a proposal for reinstating a first-time home buyer's credit. And I think that that is a proposal that could get widespread support, particularly in a post or near post COVID-19 pandemic arrangement or environment where folks may have lost homes, may be looking to recover from that, may be looking to buy a new home. So a new home buyer's credit, that also generally is a kind of credit that also helps kickstart the overall economy in moving property or encouraging new construction. So that's the one that sort of caught my eye of a old new proposal coming in. Then Sharon, I understand that there are some other particularly for lower income taxpayers, some enhancements to the credits.
Well, earned income credits, some enhancements there for taxpayers 65 or older without children. There'd be a little bit of earned income credit for them. I think the most important one, particularly since you mentioned the post-pandemic, is a change to the child care credit. To make it a child care credit of up to, qualifying $8,000 of child care and $16,000. From $3,000 to $8,000 and as much as a $16,000 child care expense qualifying for the credit. And we do know that there have not only been a lot of complaints about difficulties with child care during the pandemic, during COVID-19, but if we expect child care facilities to be at reduced capacity or just simply $3,000 a year wasn't enough to have grandma take care of the kids, let alone. So I know that's on the board, and that might have bipartisan support. An increased child tax credit, raising it from $2,000 to $3,000, and for babies, for children under 6 years old, then it would be an extra $600. So that child tax credit could be as much as $3,600 per child. Now, child tax credit is under 17. Child care credit is under 13 years old. So the basic rules would stay the same with just an expansion of some child credits. And you and I, as you started, any legislation that the president proposes or would like to see, he needs to have a friendly Congress. And he may not have a friendly Senate, and that might mean that he's got to really hunt among these for bipartisan support. And I would expect child care credit to be the one he finds the most support for on those credits.
Anything else, either of you, that on individual tax changes?
Yes.
Yes.
And the big one there is to make a change to payroll withholding on Social Security taxes. And President-elect Biden's proposal is to leave the cap as it's adjusting, and I think this year that's at around $137,000 on Social Security withholding, but then to have it kick back in if an individual has earnings in excess of $400,000, that they at that point would begin to have additional Social Security withholding. We call that a donut hole. You could fall within the donut hole where you are capped at 137 and change, and then you could blow through that as your income goes up. And it creates, I think, some interesting, if that sort of proposal is accepted, creates sort of some interesting planning about timing of bonuses, because it's all about earned income. So timing of bonuses and maximizing retirement and those kinds of things. It was sort of startling, and also, just as an aside, it reiterates in my mind where in my practice, I do everything. I do individual tax, I do business tax, I do all the entities, I do estates and gifts. I do no one's payroll. I do not provide payroll. And this is just another example of how right I am.
Right, correct.
Not to be involved in that.
All right, so I have a couple of others. He's proposed a renter's credit for low-income people, a federal renter's credit. We have those in the state jurisdictions to some extent. He has proposed an expanded premium tax credit for what we know about the Affordable Care Act right now, so something new there. A long-term care credit, but it looks to me, while it's a little vague in the proposals, that he'd like to give up to a $5,000 benefit to the family members who take care of in their home a person who needs long-term care. So that looks like it's a possibility in long-term care credits, and some sort of a health insurance credit. Now, not only expansion of the premium tax credit to gold plans from the silver plans, but also something on making sure that you would have a refundable tax credit if your premiums, insurance premiums, exceeded 8.5% of your income, and then, Karen, we'd be talking about how grateful we were to pay our computer software bills.
You bet.
I mean, because this is not easy. Oh, I have one more too.
Oh, go.
Student loans. Student loans.
Student loans.
Because we're talking about individuals in the trillion or 2 trillion or whatever it is outstanding in student loans. He had President-elect Biden has proposed for giving $10,000 in student debt for all borrowers, and then he would forgive a federal student debt tied to undergraduate tuition at public colleges and historically black colleges and universities, and that would only apply to borrowers with income under $125,000. And then he just also added at the very bottom, and that cancellation of the student debt would not be taxable income. So that's considering
That's a big deal.
we have a lot of kids, a lot of students, and they might be 18 and 25-year-olds, but we have a lot of 40-year-olds with student debt remaining for long periods of time. So he has several proposals in the student loan provisions that, again, might gather more bipartisan support than expanding ACA in any way. I think there's enough resistance in the Senate on that. But some of these other things he's got a better chance at.
Either or both, and I hope both. Are there any changes in retirement plans at all?
Well, there are basic two proposals in there, but one is a startling shift. The one that is such a shift in my mind is that the president-elect is proposing, rather than a deduction for contributions to, say, my 401k or 403b plan, or deductible contributions to an IRA, rather than taking a tax deduction for those, that the taxpayer receive a tax credit. And the tax credit gets tied to the amount that I contribute. And the proposal calls for a 26% credit. And so you can see that this is a proposal that is designed to benefit taxpayers in the lower tax brackets, the 10 and the 12% tax bracket, or even the 22% tax bracket, by providing them with, for what they are contributing, not a savings at their marginal rate, but actually a tax credit that would be refundable at 26% of the amount that they contribute. So it puts them on a better footing than our higher income taxpayers who would get a deduction at their, would then only get the 26% tax credit rather than a deduction at their higher marginal rate. So that's the first proposal. And then there is a second provision in the president-elect's proposals that would, I think it is an increase or an enhancement to credits for small businesses to encourage them to institute retirement plans for their employees. Now, because we've had credits like that in the past, and in fact, enhancements to those credits under the CARES Act this year. And so, yes, this would continue to encourage small businesses to have retirement plans available.
Anything else that you can think of that you would like to add?
Not on retirement plans, but I have many things to add.
Well, enough said of that one. I cannot thank both of you enough for joining in and giving us what do we kind of expect. And so this is Vern Hoven.
I'm Sharon Kreider.
And I'm Karen Brosi.
And the best of everything for you when we're doing these new programs.